Thank you very much, Sarah. All protocol, as earlier mentioned, is observed. A good evening to all of you, and welcome to this event this evening. First, I'd like to thank Mr. Philip Bisex. I hope I've mentioned your name properly, pronounced it properly, the CEO of TradeClear, for the invitation to launch the umbrella guarantee facility called TradeClear Uganda. It's a pleasure to speak with like-minded players that share the goal of deepening Uganda's financial markets. Speaking after a long day, I've been in back-to-back meetings since morning, and just before a reception, I plan to keep my remarks really very brief. So, briefly, the introduction of TradeClear Uganda is expected to dislodge the logjam of market segmentation in the interbank money markets. I think the chairman of the UBA Treasurers Forum went into details in this, so I won't bother to go there. This umbrella guarantee facility will cover the risks of interbank defaults, i.e., if a borrowing bank fails to pay the lender in a secure transaction, TradeClear will stand ready to pay back the funds advanced by the lender. So I understand. The establishment of a facility like TradeClear in Uganda's money market, has been long overdue. We cannot therefore thank TradeClear enough for bringing us to this day. In the Christian Bible, allow me quote, in the book of Luke, chapter 5, verses 4 to 5. Jesus said to Simon, "Take the boat into the deep water and put your nets in the water to catch some fish." And Simon answered, "Master, we have worked hard all night trying to catch fish, and we caught nothing. But you say, put the nets in the water, so I will." Remember, Simon was an experienced fisherman. Jesus had no CV in his CV fishing. Now, a man was no CV fishing telling you to cast his net in broad daylight. You don't catch fish during daylight. But Simon Peter said, "But since you say so, put the nets in the water, so I will." So the Latin phrase, "duck in altum," for launch into the deep, captures the gist of Jesus' instruction to Peter, as well as the intended impact of TradeClear. For long, some players in the local interbank money markets have been relegated to fishing in the shallow waters, while others hold the big catches from the deep waters. So, the existence of counterparty credit limits, which was set at zero in some cases, have therefore constrained the free flow of liquidity among banks. Also, the absence of legal and regulatory regime for close-out netting held back market development by exposing market players of investors to several risks, including settlement, counterparty credit, currency, and default risks, among others. The avoidance of undue risk-taking limited the pool of potential players and investors, thereby stunting performance and denying the market-like pools of capital. So the stakes of having shallow financial markets are higher than which players are restricted to catching mukenene, what we call silverfish, on the shallow end, and which ones can access Emputa, Nile perch, in the deep end. At stake is the very potency of the central bank's monetary policy actions. The Bank of Uganda embarked on modernizing its monetary policy framework in July 2011 by adopting inflation targeting, from relying on monetary aggregates to achieve price stability. One of the preconditions for adopting the forward-looking inflation targeting framework is an effective financial system through which the central bank policy decisions would be transmitted to the broader economy. The fact that we are launching an umbrella guarantee facility to help overcome money market segmentation today implies that we undertook inflation targeting, although the financial market was not yet fully efficient. The shallowness of our financial markets was counterbalanced by solid central bank independence, a flexible exchange rate regime, fiscal prudence, sound and well-regulated financial institutions, and a progressive spirit of policy innovation to design solutions for challenges as they arose. Fortunately, the Bank of Uganda has successfully fostered price stability with inflation targeting framework despite the incompleteness of the financial system and some recent challenges in inflation. I'll return to that later on. Nevertheless, the remaining frictions in the financial system have prevented the smooth and timely adjustments of interest rates in line with central bank's policy stance, at least to date. Despite the traditional downward steepness of prices, the extent to which commercial lending rates adjust and reflect policy changes and underlying factors like inflation have been intolerably limited, to put it mildly. The underlying market efficiency diminishes the impact of monetary policy by throttling the smooth flow of liquidity across the financial markets and to the real economy. And so all stakeholders must do whatever it takes to advance market development so that the financial system can effectively serve the real economy with optimal payment, settlement, and transactional services, including intermediation, as well as risk transfer and insurance. It is in the spirit of concerted advancement of the financial system that Bank of Uganda and TradeClear undertook to work together by signing a memorandum of understanding to support the development of the interbank market in Uganda. That was in 2019. The MOU prioritized three key areas, i.e., legal and regulatory review on the enforceability of the International Swaps and Derivative Agreement, which I'll call ISDA, and the Global Master Repurchase Agreement, GIMBRA, piloting a money market development framework diagnostic tool, and TradeClear's umbrella guarantee product in Uganda. I'm happy to say that TradeClear has more than met its obligation, as evidenced by several milestones achieved in the agreed mandate. My late governor would say Obugalo. Indeed, TradeClear has also since undertaken to support the development of a bond market governance framework and is also assisting UBRA to facilitate the local pension funds to participate in the secondary bond markets and repos. Today's launch of TradeClear Uganda is yet another critical milestone for market development in Uganda. TradeClear aims to professionalize market trading and reduce counterparty credit risk such that all banks across all market segments can maintain access to interbank funding and risk management instruments. TradeClear introduces standardized ISDA and GIMBRA contracts between all participating banks with variation margins exchanged weekly in Ugandan shillings. Together with TradeClear, guaranteeing mark-to-market losses upon default by a participating bank, combined with the existence of a counter guarantee by KfW, this is a AAA rated German development bank, counterparty credit risk will be mitigated and trading lines are expected to increase across the market. In addition, the program has and will continue to be supported by TradeClear's training and capacity building efforts, focused on upskilling banks to ensure they can meaningfully participate in the interbank market. With TradeClear centrally providing the valuation and margin calculations to all parties, eligible market players will avoid the need to invest in expensive valuation systems on their own, thereby lowering the barriers to participation in the interbank market. All in all, TradeClear is intended as a practical means of coordinating market development with long-term goals of establishing financial infrastructure, such as a central clearing counterparty, once the market is further developed. It is important to note that TradeClear is not intended to replace existing credit lines in the market, but seeks to supplement them and ensure a minimum amount of credit capacity at any time. We therefore hope that a meaningful interbank market will develop on the back of TradeClear, and in particular, that a deep and efficient repo market will take off. While Uganda enjoys a relatively developed swap market, the horizontal market remains in its infancy, with very few transactions occurring regularly. The latest count in terms of total market trades for the year to May 2022 was only at 10%. Now, this compares very unfavorably to more advanced markets where the turnover in the repo market can account for as much as 40% of the total secondary market transactions. Repo markets are critical for the functioning of the financial system, as a liquid and a deep repo market will improve monetary policy transmission, facilitate depth in the secondary bond market, and allow for a meaningful interest rate benchmarks to be established. In the BU's commitment to the development of the Uganda's financial system, we could not have had a better partner like TradeClear. I'm especially pleased that TradeClear will facilitate the development of a deeper and more inclusive interbank market where the phrase "Duke in Altam," launched in the deep, covers the transactions of all players regardless of their inherent size, so that we can all catch Mputa. Finally, we would not be here without the support of our cherished development partners who have generously supported financial market development in Uganda. And just like Rome was not built in a day, the work continues. I want to congratulate the financial institutions that have taken the bold step to join TradeClear program. As you are aware, participation in the TradeClear program is voluntary and based on informed assessment and judgment of the participating financial institutions. The benefits of participation will accrue directly to eligible institutions, to the market through increased vibrancy of interbank trading, and ultimately to the central bank through the smoother transmission of policy signals to the real economy. Before I conclude, it would not be fair for me not to say something about the recent developments, and this has got to do with the inflation. I know this is something that's concerning everybody. Inflation is picking up from the loss of under 2.5% in January. We are now talking of north of 6%. But of course, you are all aware that this is a supply side driven inflation, and the role of monetary policy in this situation becomes challenging. However, monetary policy is well designed to deal with the second round effects of such inflation once these isolated commodity prices begin feeding into other non-commodity prices in the basket of the CPI. Like we've seen how the high fuel prices have fed into the transport sector, which is basically affecting most of the items in the CPI basket. So that is what monetary policy is designed to do. Now, since that has happened and has been proved by the numbers for April and May, Bank of Uganda, in its last MPC meeting, decided to raise the CBR by 1 percentage point. And we affirm that we will continue to raise the CBR until inflation is firmly brought into control in line with the medium-term objective of 5% per annum. Read me on this. Bank of Uganda will continue to raise the CBR until inflation is firmly brought to its medium-term objective, because we don't want this to get entrenched. At the same time, we're expecting that as we control the growth in aggregate demand, we are urging all the other players to do their part in terms of increasing supply, triggering supply. How do we take advantage of the rising prices in order to increase supply? An example is the rising food prices. How can the subsistence farmers take advantage of this to increase their output? First of all, to guarantee food security, sell the surplus in the market, and additional income to deal with the impact of rising commodity prices. And if they all did that, we would increase aggregate supply of food crops and therefore generate lower the price. So I won't believe that this is a temporary thing, where if we put our heads together, we can solve this problem. The budget that was read yesterday by the Finance Minister for FY 22-23 focuses on triggering the aggregate supply side. And I would like everybody who has the capacity to increase aggregate supply to take part, so that we reduce the imbalances between the aggregate demand in the economy that we are trying to tame through monetary policy and increased supply, so that the imbalances result into lowered prices. Together we can achieve this. It's an opportunity for us to see how we can boost our own production and deal with this. And that, of course, now takes me into one thing, that because of the global inflation, the prices of imported goods have generally gone up. And because we have not significantly reduced our demand for imported goods, it means that we are demanding more foreign currency for about the same amount of goods we're importing. And that is exerting pressure on the demand side in the foreign exchange market. And also we are aware of the fact that as the advanced economies raise their interest rates to deal with their own inflationary challenges, portfolio players who have been very active in this market are repositioning themselves to see whether they can go back into those advanced economies market. So as a result, we've seen significant purchases of forex by portfolio players, and that also is adding pressures to the demand in the foreign exchange market. As a result, the exchange rate has depreciated quite significantly in the month of May, but is only responding to the demand conditions because the supply has not kept pace in tandem with that. So what does the central bank do? I think the central bank is there to maintain price stability. And remember, price stability does not mean constant prices. We are saying prices should rise smoothly if they are dictated by fundamentals such as the exchange rate. So one thing that I want to assure you all is that the Bank of Uganda will deploy all the tools and the instruments at its disposal to ensure that there is no volatility in the foreign exchange market. We will smooth out the volatility and allow the exchange rate to move in tandem with the fundamentals that determine it. So I want to assure all of you that the exchange rate, notwithstanding the fact that the fundamentals are changing, we will try to ensure that the exchange rate moves in a smooth manner to reflect the changing conditions. So I thought I would mention that as well, because it would be unfair for me to close that without mentioning, since it's at the heart of the central bank. So it's now my singular honor and privilege to launch TradeClear Uganda and Thank you all for listening to me, and God bless you all.